Everybody talks about the Fed. We talk about Fed Day. We typically have a countdown to the Fed's monetary decisions. When Fed speakers, when they come out and talk, the markets listen and the markets tend to react. Well, what is the Fed? The Fed is the Federal Reserve Bank, and it's the central bank here in the U.S. The Federal Reserve is one of the biggest central banks around the world. It holds about $7 trillion of assets, which make up about 30% of GDP. The Federal Reserve's primary jobs are setting monetary policy, but they also supervise our banking system. They make sure there's a smooth and liquid payment system that goes on here, and as well as protecting the U.S. consumer rights. These are just a few of the jobs of the Fed. Let's clarify this before we get started. The Federal Reserve is independent. Now, while they're overseen by Congress and several members are appointed by the president, the bank is independent of political policy and should not be swayed by any political views. Now, what we're going to focus on in this white paper is the FOMC, which is a committee made up of members of the Federal Reserve. The Federal Open Market Committee, they meet 8 times a year and they set interest rate policy. They have a dual mandate. It's to make sure that there's price stability with maximum employment in the economy. What does that mean? That means that inflation needs to stay under control, but there also needs to be as many jobs out there or opportunities that there are people looking for jobs. Now, when you look at this table, it shows you the makeup of the FOMC. While the Federal Reserve Committee or the Federal Reserve has 7 Board of Governors, when you look at the voting members of the Federal Open Market Committee, it includes those 7 Board of Governors. Those are all appointed by the President and confirmed by the Senate. It's also the New York Federal Reserve President, as well as 4 regional bank members from the table above, which shows the different regions. This is meant to give some geographic diversification to the committee, and those 4 members actually rotate on an annual basis. By having rotating members on the FOMC, it assures that the committee remains independent. It gives fresh perspective on the economy, on inflation, on interest rates, but it also sparks that debate that we need so that these committee members can make the best decision and balance out those risks of inflation as well as the labor market. Now, in 2026, there's a lot of headlines around a new composition of the Fed, and we will have those 4 voting members that were part of the committee. They will move out and we'll get 4 new voting members, but we also are set to get a new Federal Reserve chairman, and that's where the headlines are really focusing. President Trump has voiced his public support for Kevin Hassett, and as you can see in this chart, that there's about an 80% chance that Kevin Hassett becomes the new Fed chairman. He will replace, if he is appointed and confirmed, he'll replace Jerome Powell, who's been in that seat since 2018. One of the big questions and concerns that we hear is that monetary policy is going to be influenced from the White House, given the fact that Kevin Hassett does have a close personal relationship with President Trump, and he's the director of the Economic Council. Now, we do not think that's the case. This is a committee, and it's made up of a lot of different members that have differing views. You'll hear the term hawk or dove. When you hear that, a hawk is someone or a committee member that is more concerned with inflation. A dove is one that's more concerned with the labor market. They want to stimulate growth. The hawks want to make sure that we always have that price stability. And when you look at this chart, we compared the current voting members of the FOMC and whether they lean hawkish or dovish to the new members that we will see for next year, those 4 voting members that will rotate in, as well as assuming that Kevin Hassett gets the job as the Federal Reserve Chairman. To classify these members, we simply use their most recent rhetoric. Has their most recent rhetoric been that they are concerned about inflation or they're concerned about the labor market? Because we know that the Fed's been cutting interest rates, and some people would say that's dovish. But they deliver a lot of remarks, and we also know that this Federal Reserve is very divided. In fact, we had 3 dissenters at the most recent meeting. That's the most dissenters we've had since 2019. The chairman chairman's job is to bring everybody's views together and then disseminate one cohesive or one view for the entire committee. But we get a lot of rhetoric from these Fed speakers, and it does tend to move markets, which you can see in this table that there's going to be the same amount of doves on the committee that there's going to be hawks for next year. All of the voting presidents that are rotating in also are considered hawks. They've been very vocal about being concerned about inflation. We also see that Kevin Hassett will come in, and he has been more concerned about interest rates being too high. He wants to stimulate growth, so he's classified as a dove. While Jerome Powell has sometimes been a centrist, we took his rhetoric that he's had prior to becoming the chairman, and he tended to lean more dovish. So as you can see, the consistency or the ratio of hawks to dove is not expected to change in 2026. The concern is that Kevin Hassett will influence the rest of the committee towards his dovish views. Now, we would argue against this, as he has publicly in the markets, because of the fact that a Federal Reserve chairman is concerned about his own legacy as well. And let's remember, he's one person on the committee, and we just showed you that the committee still is leaning towards more hawkish or more concerned about inflation, not necessarily wanting to stimulate growth. This chairman, there has been historical, history books written. There has been examples to look at when you have a chairman that's influenced by a politician. This has detrimental effects on the economy, on inflation, and the labor market. So no chairman wants to repeat history. They want to go out on a high note with maintaining prices as well as a strong economy. So we don't think whoever sits in that chairman's seat is going to be influenced by the White House. This white paper has been an educational piece, and there's a lot more detail if you want to read the full document. But really, to summarize this, from an investment perspective, we take changes like this in the Federal Reserve or the FOMC, we take this as something to monitor. It's not going to dictate asset allocation. Now, we do think it's going to move the markets quite a bit in 2026 because we mentioned we actually have a very divided committee. So this isn't going to change next year. That means that the speeches that these officials give will be highly scrutinized. That means the meetings will be highly scrutinized. And if Kevin Hassett becomes the Fed chairman, he will be under the microscope as far as his relationship with the administration. But we're not going to make any changes to asset allocations around this new consistency. Instead, where we think there could be some risk would be in bond markets. Now, if Kevin Hassett comes in and puts a very dovish view on this committee, and the committee leans more dovish in an environment where inflation is still not at their target, that can actually inadvertently cause higher inflation because inflation expectations can rise due to that. So we still, regardless of what happens, we think that be concerned with long-term bonds. That's something we would avoid. And long-term bonds, volatility in that can also impact equity markets. So be very careful of what price you're paying for those high multiple stocks. Those are the ones that get hurt when we see interest rates move higher. Now, we'll continue to monitor the situation. We'll make changes to asset allocation if it's warranted from an economic and inflation and an earnings perspective. But at this point, this is really just a white paper to educate you, maybe take some of the noise out of the headlines that you may see, and also some of the concern that we may have a chairman that is very politically driven. We do not believe that's going to be the case. The chairman has much more at stake than being persuaded by a political party. That's all that we have, and we invite you to listen to our Markets with Megan podcast, which is a quick podcast on a regular basis to go over some of this economic noise, the data we see, what that means for the Federal Reserve, as well as our asset allocation. Also, From the Ground Up is our podcast with our CEO, Leo Kelly. He really dives into business owners and how they start from the ground and they build that business for a successful exit. Also, The Alternate View is from our head of due diligence, Matt Andrelot, and he goes over the alternative investments that are very important in this volatile environment. He breaks them down and explains what each of these different investments mean and the value that they have holding them for long-term investors. Thank you.